How are we on this fine morning?
Good.
Fantastic. Just use a word different to awesome.
Is everything okay, Aaron? Is that like a safe, not safe word,
Code word.
a cry for help word?
Yeah, it's my call for help. No, all is good.
Is this light too bright? Should I close the window?
No, but it's looking very London-esque out there. Are you at Lot 14?
It is.
Wow. Yeah.
I'm waiting
looks
to see like a fiddler on the roof or like a 7-year-old about to clean a chimney.
I actually love this. I think it's so beautiful.
Yeah, it looks very European.
Yes. One can dream. One can dream.
How are you, Jack?
Yeah, I'm going pretty good. The weather, I feel like the weather's turned in Adelaide, so we've had some really nice days.
How are you, Don Don?
I'm good. It turns out that a reasonably healthy diet and good exercise helps you sleep, become more energetic, and a more functioning person, which I already know, but I always catch myself when I get back into the swing of things because I've slept for like 8 hours, 3 nights in a row.
So what does that make bedtime?
Well, I'm always in bed at 8, but I'd been struggling to get past 2:30, but now I'm getting to like 4:30 and it's awesome. The problem is my output is going down because my most functional output was often between 3:30, 4. So it means I'm having to work a little smarter, but
Like
Who knew diet and exercise?
I know, right? Reduce
Sounds like-
alcohol?
I don't drink, so that's not really a problem.
How are you in BC and not drinking?
I was just processing the comment. That was
Yeah.
the long pause.
But I got my bike set up properly again. I've cleaned my office. When I say clean, I mean that's as clean as it gets. And then I got a new treadmill. But it's one of those ones that like connects into the internet and then connects to others and you connect to your heart rate and then it just does everything for you except for the running. That's the problem. That's what lets me down. I've still got to do the running.
All the gear.
Oh my God, I was literally about to say, you are the definition of boys with these toys. Not only like an excavator and you have toys in every aspect of life.
The word toy is aggressive. It's rude. It's unnecessary. I have
Tools.
I have equipment in a range of parts of my life that has nothing to do with trying to soothe or close over the gaps of a difficult personality.
Even if they were dead toys, there's nothing wrong with that.
Yeah.
I'm waiting for the running desk. Next podcast. You will have the desk set up over the treadmill.
We got them and we put them in the office because the idea was we would have these meetings on walking desks. But it just doesn't work. You can't type. And then after like 4 minutes when you go, yeah, and so I think what we do next week is, so now they're gathering dust in the corner.
I remember Facebook in London introduced them in a whole section of the floor, and we visited, and they were really popular. And then next year went back, there was just dust on them. No one was using them.
I think I would like it. I think it would soothe my brain.
Yeah, well, I guess it's sort of a tool and a toy, but one of the things I just wanted to reflect on here is these AI tools. This week I've started playing with the text-to-voice generation, and it is really impressive how well they've progressed. And so I used 11 Labs, but then I found that actually Descript has that functionality in it, and it's actually much better than 11 Labs. And so I have signed up to 11 Labs for what, $9 a month, but I'm going to cancel that now because I've already got it in Descript. It means it's going to make the podcast a lot easier to edit because we can just add in other things. But it just comes back to that commodity product with a zero marginal cost, subject to competition. The marginal profit always goes to zero. So I look at these things that a few years ago were just absolute magic, game changing, and you'd expect that someone would be able to make good money. But it's one of the reasons it's kept us out of investing in the pure AI stuff because so many of these platforms now have that same functionality. It's a commodity product with a zero marginal cost. I just don't see anybody making any good money long term.
Totally agree. It's like one of the pitch calls yesterday where the founder was saying how they can get a new medical practice up and running on their platform within, I think it was 1 minute, 37 seconds or something, Jack, or it was minuscule. But my immediate thought is switching costs. Like if it's that easy to turn on, it's so easy to turn off. And I think even with AI, like one of the things we've been hearing, and I saw it myself, the ability for these AI tools now where you can just drag and drop all of your previous data, connect an API into the system, and it'll automatically do the transition over. Yeah, there is a definite erosion of switching costs.
And I think we talk about it often, but for founders, you've really got to work out what your durability is going to be. And I think that earlier sentence, a commodity product, okay, how do I make sure that I'm not a commodity product? Subject to competition, how do I reduce my competition? How do I create my own space? And then the third bit, with a zero marginal cost, how do I make sure that the value that I'm adding has some marginal cost somewhere that people value? And so I think if you take that sentence and apply it from a founder lens, as well as an investment lens, and that's why sometimes with our co-investments, it can be a little bit difficult saying no to co-investors who really like something, but it breaches that sentence and we just can't look further.
I think there's a lot in it too around like founders who treat their product as if it's a commodity product. Like they actually behave in a manner where they end up competing on price rather than actually genuinely describing their unique value proposition and differentiating on that. And I think for founders, they get so fixated on their tech, but our tech is XYZ. But the part of that commodity aspect is the outcome for the individual using it. If I can get the same, it's like beta versus VHS. Like beta was the better technical product. VHS won the market.
Aaron, you need to explain it to our young co-hosts what the fuck you're actually talking about.
My kids actually asked the other night what a CD was. I was like, you are kidding me.
It's a Frisbee, isn't it?
I was with you with VHS. I was like, okay. And you're like, Betaverse. And I was like, assuming it's a competitor, assuming it's probably something that did a similar functionality.
No, it's 10 years earlier.
It was earlier.
Wow.
It was better quality. It was smaller form, so cheaper to ship.
Back in my day, we used to go to the disco and we used to put on the wireless. Woo!
Drink us some moonshine.
Jack, what are your thoughts? Because from a Helmer's point of view, I don't think anything has changed, has it? It's just become a little bit harder to see the future, or do we actually see some things are changing?
I just think switching costs is changing. Like switching costs was the first thing you would look for in a technology business. But in the age of AI, switching costs doesn't look like what it used to look like.
I think it's barriers to entry as well, right? Like the cost of launching a product has dramatically decreased. And so with that, you're having more products. So therefore more competition come to market. And so I think that has also added to the dynamic from my view.
Yeah, just the ability to get stuff done. Well, that sort of segues to an article that was in the AFR. Oh, I can't see where there's a journalist. Okay, there's no journalist on there. But it's starting to sort of penetrate the traditional media. It says how AI could create the one-person unicorn or the first one-person unicorn. And this article talks about a range of things. Do we think that's possible? That the one-person unicorn is about to arrive?
I think
Possible, yes.
theoretically, yes.
Probability-wise?
But
Well, actually, possible. I don't think we're there yet.
Aaron's person. I think that there's just so much more than just building a business, delivering a good product, than actually just functioning the business. There's so much emotional toll. And so for me, I just think about, do we actually think one person could handle that in isolation? And that's where I hesitate on thinking that this can happen. But I guess it depends on support systems around as well.
Yeah, I think you're right, Ash. I think someone can probably get one out of the gates and make it, but will it be sustainable? Will it survive? And I still come back to the PAEI model that we've often spoken about. In a business and in life, you need to produce, that's the P. You need to administrate, that's the A. You need to entrepreneur, that's the E. You need to integrate. So you need to produce, administrate, entrepreneur, and integrate. And the problem is that one person doing that is next to impossible. We tend to have strengths, and it's complementary teams that tend to win out, where you have the P's, the A's, the E's, the I's working together. And a traditional founding team is often a P and E dynamic with an A and an I dynamic. Not always, but it's helpful. And so I think one could get out of the gate by being very high P and very high E, but when you don't have the A and the I, it can be a challenge. Now, will the bots, will the agents be able to do all the A and all of the I and to an extent all of those ingredients potentially? And will somebody who understands PAEI be able to approach it so they've actually got their business structured PAEI, so they get their agent structured PAEI, and they become the Wizard of Oz behind the curtain, just managing them on that basis? I think it's possible, but yeah, I just separate the creation of one to begin with and then the survival of one.
I just wrote down to build myself one of those. So thanks, Tom.
Yeah, if it was easy, everyone would do it. Jack?
Yeah, I totally agree with your comments, Don. Like, I think we will see it, but I think once like the title's been claimed, they're going to hire people. And then if they want to have a unicorn business over the long term, they're going to need more than one person. But I think we absolutely will see it. And I think we'll actually see it in the next 24 months.
And I've just got to wonder, like somebody who sets out to do something by themselves that doesn't want to be doing it with other people, there's a personality thing there somewhere. Mm-hmm. Yeah, I don't know. Well, we've lost Aaron, so let's just replace him now with an agent. Replace Aaron while he's out of the room. Now, slightly related to that I thought was a bit interesting, because you guys were born after this date, but Australia had Expo 88. And one of the themes was, what are we going to do with all of our spare time with the arrival of personal computers and all of that? Well, we see what's happened. But to a certain extent, AI sort of sells a similar thing, I think, of more free time, more ability to do other things. But I must admit, the more I get into these tools, it's the busier I'm getting. And Jason Lemkin did a post. So many folks felt burnt out in 2022 to 2023 when things got harder after the best of cloud times from 2020 to 2021. Now we're in the AI age, and most of us are working far harder than we ever did before, and more intensely. Managing AI agents all day is cool, but it's intense. The output rate, the productivity rate is so high, it just takes so much concentration to manage it, versus checking in with the teammate once a week for a coffee chat. So I think the real burnout is still coming. The burnout people felt in 2022 to 2023 will be minor compared to what's coming. We're now orchestrating 10 AIs in SaaSta with a tiny team. And while I love it, I can already see hints of burnouts on our tiny team. It's an arms race in AI. It's a gold rush, but it also will leave many people like us burnt out like never before in 18 to 24 months. Where that goes, he doesn't know. I think it'll be interesting. I still look at burnout. I don't think it's possible to get burnt out if you're doing something that you really enjoy, that is meaningful, that is delivering results. Can we fall out of balance? Well, I think that just flows back into that meaningful stuff. You fall out of balance, you're not concentrating enough on family or health or whatever's. So I think we just got to be careful of that definition of balance. But yeah, I think in this early stage where it takes a lot of effort to put into these AI tools, they do become all consuming very quickly.
Yeah, 100%. And I think that one of the other things that is associated with those comments is just the psychological shift of managing agents versus managing humans, and the fact that there still is a huge amount of cognitive load on that manager to provide the right context, to provide the right instructions. And I think people are underweighting what that means and what that takes out of someone. I think that will improve as the technology improves and context engineering is less and less of importance. But yeah, burnout, yes, I've had it before, but I didn't have the balance done when I had it. I had fallen out of love with what I was doing. I think it's going to be most burdensome on those as they have to quickly adapt as new models come. So there's also the retraining, rewiring consistently as well.
I think the other thing to add, and I don't know if it falls under burnout, but the feeling of being overwhelmed, because there's so much uncertainty with this new technology, and it's not just short term, like it's here to stay. So there's just like growing uncertainty in the market and like for everyone's individual jobs.
Yeah, I think it absolutely feeds in. Like, I think it's far easier to burn out in a world of a lot of uncertainty because your brain seeks certainty and it just starts firing off ways to try and protect you, I think. So I definitely think it's the case. And then I think I've found the use of some of these tools actually decreases my overwhelm, especially in that last IM. I would normally freak out and just go, how am I going to get the brain space to properly do this? But it has been really awesome using it, and it's reduced my overwhelm because I have this partner that can take my knowledge base and then start things for me. But what I've caught myself is I can also see the slippery slope to being dumber really quick. Like yesterday on a couple of things, I didn't even bother to try and explain what I wanted from the thing. I put half the sentence in there, and it's become that good that the responses it normally gives me, I go, fuck yeah, that's awesome. But I'm not putting enough thought into it. And so I wonder, as time goes on, if I was to continue that behavior, would I start to lose core problem solving and become more overwhelmed in other parts of my life where these tools aren't available because I'm allowing myself to be lazy over here? So I can see these little reflexive loops happening.
That's super interesting. I was listening to a podcast around context engineering, and prompt engineering was originally kind of where a lot of language was, and that's kind of shifted. And I think, yes, until you actually spend the time to build your prompts and actually really start to mine for insights with your AI agents or your chatbots, and then you actually start to see the difference from putting in half a sentence to actually spending the cognitive load and actually being very articulate, very to the point. I have one chat open for me to help build a prompt to then put into another chat to then get the research that I want. And so I think depending on how you're using it, there is that slippery slope. But if you then actually start to think about, well, how do I optimize for the best return? How do I take this to the next level where the output I'm getting is not just surface level good, but it's actually something usable, meaningful, can really help shift your day-to-day workload? That's when I think the cognitive load and the insights and the problem solving continues to be needed. It's just adapting that thought process.
I saw a reel it was a bit of a joke, but it was the effects of AI 5 to 10 years from now, where it was a work meeting.
Oh
just
yeah,
constantly prompting.
How good was that? I'm going to put that. I'll splice that in here. That's very funny.
But that's where I see it heading. And I think
I almost sent it in the group chat to attack maybe some of the younger generation, but I felt better of it.
But I can see it heading that way already. And there's been a few early studies talking about the effects on the brain of just outsourcing every thought to a prompt to get the loop back. But even I know with my kids, like in terms of what they're studying, and they're like, I don't need to memorize this because I will always have a world where there's AI. I can just prompt and get the knowledge. So why do I need to store that in my head, Dad? It's like, I can't argue with that. Or the skill.
Yeah.
Sorry, you go.
Yeah, I was trying to take the positive view of that. Does that will it free up other parts of our minds more on sort of the empathy, connection, authentic communication kind of thing, or will it just across the board make us dumber and we end up eating food from a trough?
Well, I think if the internet being the information age and then the manipulation age has shown anything, I think it's bifurcation. There'll be those that use it and gain, and we could potentially see the dumbification of society. Sounds cynical, but I think that's where these things tend to play out.
Yeah. Well, AI is changing a lot of things, including SEO. But I called James Deck this morning, one of our LPs and great supporters of Tribe, who actually shared with us how Monday.com had lost 40% of its market cap over the last few weeks. They're pointing the reasoning back to SEO. But what I might do is we'll try and record with him, and then I'll splice it in because James has quite a few ideas. A company that isn't losing 40% of its market cap because it's not yet public, but I think is going to help with the whole overwhelm of its employees a bit, because I have a feeling I might be a little less overwhelmed if I had like a shitload of pineapples in my bank account. And that's Canva. So Canva, some of its shareholders, Blackbird and SquarePeg, have written up the value to 65 billion Aussie dollars. It says it's the first time that Blackbird has publicly changed its valuation on the industry-leading darling since 22, when it infamously wrote it down to 25.6 billion US dollars. Square Peg's done the same. This is on the back of the Figma IPO that just blew the lights out. And if you extrapolate a few things, Canva's worth even more than 65 billion. But in parallel, there was then another article. Not only are the LPs writing it up, there's a secondary share sale at what seems to be the same price, 65 billion, and it's oversubscribed. So employees will be able to sell up to $3 million worth of their vested equity at this new valuation. The secondary share sale funding is being led by existing shareholders of Fidelity, while JP Morgan Asset Management and Growth Equity Group have bought in for the very first time. I wonder if this time with these secondary share sales, we'll start to see that money flow into the early stage ecosystem. Because remember, we looked at an article where someone had done some analysis, whether it was real or anecdotal, of all of the money going into first payoff houses, buy new houses, which makes sense. When you first make bank, let's get the house and the family sorted. I wonder if now we're going to start to see some of that money go into the early stage.
That's a good question. What's the next wave of capital deployment after paying off mortgages? Will we see a flurry of exotic cars?
Toys.
Everyone's going to have a treadmill.
Excavator.
If it is from people from, my venue, Canva, because they've been part of the ecosystem, I'm hoping that they'll be a little bit more open to a alternative investment portfolio, which includes VC. But yeah, I still think the number one thing that we come up against when raising capital is investments into property.
Yep. It's what people know.
It's been interesting. A couple of exited founders I was chatting to this week that are coming in on the fund, like they've been sitting on cash with the 12 months post-exit. So they put a lot into the public markets, but they've actually been quite healthy. They haven't gone out and bought the exotic car or anything else. But it is interesting. I remember the story of when Facebook listed and the first 1,000 employees who became millionaires, and that there was this sudden flurry of Ferraris and Lambos in the car park. And when you actually visited Facebook, you actually saw them all parked. I don't know if we'll quite have that in Australia. It's probably more likely annual trips to Japan for skiing and a month in Europe and some maybe investment properties by the beach.
Yeah, that's the first thing that happens. On the beach, holiday, either apartment or house, depending on your exit, like that. Actually, so that partly answers the question. Okay, they've paid off the house, probably got a bigger house. Maybe it's not this one. Maybe they've first got to get the beach place. Maybe it's the next secondary sale our sector starts to see some heat. Well, secondary sales for Canva seem to be no problem, but one of the challenges for this asset class with low liquidity is that sometimes people get themselves into trouble, or they've got a new excavator that they want to buy. The best one I've seen was Marcus Blackmore going to the ASX to announce that he needed to sell some of his shares because he just wanted a bigger boat. And that was actually in the announcement. And I thought, at least he's being honest. I quite like that. But there's a new fund called Advanced VC that signed high-profile backers for a new fund that will buy up unwanted stakes in the investments of venture capital operators like Blackbird, Tidal, and others. As startups say private for longer, VC firms extend their life of their 10-year funds. Melbourne-based Advanced VC has emerged as a buyer for investors who need to sell their holdings for reasons including financial distress, divorce, or wanting to rebalance their portfolios. It was founded by Max Korsman, a former investor at Sydney firm Tidal Ventures. I've put the details in the notes there, but it says Advanced VCs bought stakes in 11 VC funds, including vehicles operated by Blackbird, Tidal, SideStage, and StartMate to gain exposure to 200 companies such as Canva, Airwallex, and PsyQuantum. What I like about this is that you get the benefit of actual performance. So you're only going to buy your winners, but if someone needs money for divorce or financial distress, you're going to get a good val if you're the only buyer in town. So it makes a lot of sense if they get those vals right and they buy things that don't fall off a cliff.
I love the model. I think it's great for the ecosystem. I think this could potentially help companies that might have a failure event, like particularly if there's some founder stress occurring and now they're able to get some liquidity. Yeah, well done on them and what they've built. I think it also helps the VC market in general, because as funds come up to end of life and they're still sitting on assets, like the more liquidity that is created in the market, the more opportunities there are for those investee companies to go somewhere off the books of that fund. Because in the last 12 months, we've been seeing funds essentially transferring companies, portfolio companies, from one fund to the next. And there's all kind of dubious questions around who sets the val on that. How do those investors in the second fund feel about that when they're essentially providing returns to the first fund investors on LPs? So I think the more of this that exists, the better for the ecosystem.
Yeah, looking at the list of people it's raised funds from, it's a bit of a who's who of venture done well. It will be interesting to see the IRRs, because even if you were to get, say, a good discount on a high-performing company, to get the 30% IRR that we're going for, it's probably going to be difficult.
Yeah, I totally agree with that. It would have to be a bloody hefty discount.
Which sort of flows into my theme of the week around portfolio approach. Because one of the things with this new deal that we've launched and having a whole lot of deals is just talking through investors and seeing the different approach people have to portfolio approach. And the biggest approach is not having any portfolio approach, which is a risky thing in this asset class. But like if you're an LP in this fund, understanding what are the likely returns, what's the risk to reward ratio. But if you're going to have allocation to venture, not all ventures the same. My view is that one should spread their allocation to venture at the different phases of the life cycle, because the more certain of something, obviously that IRR is going to come down. But when you have a look at some later stage venture, actually PE and some listed markets often are a better bet because of the liquidity, but nothing compares to early venture done really well. And I think people need to be careful when they're constructing their portfolio approach, not to just use the heading venture and actually end up finding they're just stock full of late stage stuff that is highly cyclical, that turns out can't do better than what they could have done in public. That was my little theme of the week. The way I sort of look at portfolio approach is you got to work out how many horses you're going to have in the race, accepting the horses all look a little bit deformed sometimes, but do they have a chance of winning the race? Does more than one have a chance of winning the race? And that's why I've, a portfolio of 15 to 20, does this meet the requirements to be one of the horses in your particular vintage? And I think that's the other thing that people need to build in, is this idea of vintage. And we get investors that have invested during certain vintages, like 21. They throw their hands up in the air because they ended up getting into stuff that was at too high a valuation, that's burnt through stuff that wasn't sustainable. And then they throw their hands up and say, I don't like this asset class. But actually, when you look at the best vintages, they often come after the difficult times of market excess where everything re-rates. And if you pull out of this asset class at the best time to invest, you can leave opportunity at the table if you can get good deal flow. Keeping in mind that this is not financial advice.
My theme of the week was very similar. With launching our new deal and knowing that we've got a number in the pipeline, both new deals and then follow-on opportunities from our current portfolio, I had a number of investors reach out and want to understand what the pipeline looks like, because obviously some of our investors have been with us for a long time, and so they are taking that portfolio approach, or at least trying to. And so I thought that was really good to see some of that educational stuff that, Don, you've been putting a lot of work in, and Aaron in particular, of helping our ecosystem and our listeners, but also our investors, really start to build that knowledge and their own perspective on how they do that. So I thought that was a really cool thing to be a part of this week, seeing that transition from people who haven't had that perspective previously. So yeah, in line with yours, Don, but the more people calling and saying, here's the view that I'm taking, what's in the pipeline, what's the timing on this, knowing that, some were later stage, Series B now, or, bridge rounds. And so they were looking at it from a life cycle perspective as well as industry. Not financial advice also.
Yeah. I've been working on the next deal in the pipeline, which has been keeping me busy. But I suppose, something I really like that we've done differently this time is just how we've structured or how we've presented the deals to our syndicate. Instead of just doing the full polished IM up front, we started with the 2-pager, generated interest, and then followed with the full IM. And I just thought that sequence worked really well.
Because what I really liked from it, Jack, is the amount of objections that we got that we hadn't articulated well, because it wasn't the full IM, but it was almost a cheat code to the full IM, because it's like, we've got an answer for that. Okay, I can see why that. Like, it helped us accumulate and make a much better document in the end.
And we also got some good pointers from the syndicate. So it was like helping us do our DD.
Yeah, big shout out to Mikey Metcalf, who really helped with a lot of stuff, both from his own experience, but was out there doing stuff on our behalf. Like, that's what we've got to get better at in this fund, explaining why we're going to keep syndication on the side, because if we didn't, we wouldn't be getting that level of engagement. And there'll be some deals that we get more conviction on because questions come up that we really can answer, that we're really happy with. And then some deals we'll learn stuff that kills the deal. But if you're just a fund with an investment committee with a small group of people trying to be the be all and the end all, it just scares me.
I did really enjoy reading Mikey's decision framework, and I wish all investors would give us that if they're in or not.
Yes, I loved that. I think the other cool thing was the number of immediate yeses off a 2-pager as well. Just like, yep, put me down, I'm in a band from X to Y. And so I think, that also demonstrates the trust that we've been able to build over 4 years, but also where interests lie. And I think, we had 2 or 3 people go, no, not interested in this industry. But then, at the bottom of the email or when they call me saying, but I'm interested in X, Y, and Z deals, if you can make sure you call me when they come through in case I miss it. So actually getting that feedback from our syndicate base is so valuable for all of us, because it means that we can prioritize and have different investors' lens on as we're reviewing deals and putting deals together, where we can be proactive and we can pick up the phone and say, hey, we've got something coming in 2 weeks. Here's what it looks like based on our last conversation. It might be of interest.
I love these themes of the week. They're really good. And definitely that one of extracting the most value out of our syndicate base. The way we approach this deal, I think, just helps us get more of that value. And even articulating that to a couple of the potential LPs this week has really resonated with them. But I want to go back. My theme of the week kind of correlates to yours. So it's not just on the LP and investor side about investing at the right times in the market, not just the boom times where capital is flowing freely, but it's also on the GP side. I think of the number of funds in Australia that have closed down or are closing down versus those like us that are out raising. And I was thinking about our catch up with Steve Baxter this week. And even for someone who has his Shark Tank profile, well known in the ecosystem, been running a family office, made so many investments personally, still has that battle of raising capital in the market because it is brutal. And whereas others have given up, I do believe he will succeed. I mean, whether listeners subscribe to his thesis or not, he is absolutely going to make that work. And I think his conviction in the market and the timing of the market will be so beneficial for him. And this is what I see as the opportunity for us. Like, this time in the market, as hard as it is to raise capital from LPs right now because of the previous part of the cycle, we are going to get access to deals where there is not an abundance of capital. We're going to get the outsized returns that flow from that. And I think the companies that have survived the nuances of that cycle and the excess capital and then having to go back through potential down rounds and just build healthy businesses, because now it's the era of resourcefulness, I think it's a fantastic time to be investing. So everything comes back to kind of the Warren Buffett, Paul Graham type mentality of, not actually just following the voting cycle of markets, but actually understanding the real value that is lying in this asset class.
Yeah, I agree. And we'll just keep being too stupid to quit.
Exactly.
Now, I have had some people, as we transition to the end of our episode, I have some people ask, what happened to Philosophy Corner? So just got a couple of
There is
ones.
no way you got that feedback. I
is like-
need evidence of it.
This is like the influencers who get on social media and say, everyone keeps asking me. It's like, no one asked you anything.
Go ahead.
Yeah. Now, just sometimes we're trying our best and we just need to know this.
You probably needed to hear this today. You're doing your best. That's fucking embarrassing, and I would be ashamed, but like you're doing your best, and that's all we can ask for.
You're doing your best.
This literally reminds me of when I was a kid, and whenever I went into a test, my parents would be, "Just do your best, honey."
Well, just keep doing your best, Ash. And when we do our best, in terms of this next one, if you want to make the big leagues, sometimes you got to make some big plays. And here's one way.
If you fart, they will forget in a day, but if you shit yourself, they will remember for a lifetime. You got to make big plays to be a big player.
No.
Not where I thought we were going.
No. Well, if you want to make big plays, you got to be a big player. All right.
I thought you might have gone, Travis Kelce putting it out there on his podcast that he wanted to date Taylor Swift.
I haven't listened to that yet. I need to. It's on my list.
I honestly, I'm not a huge, Taylor Swift music fan, but I have been extremely impressed by the business and empire she's built. And then watching that, I also love the Kelce brothers, so I already watched their podcast. I was quite impressed. So yeah,
Right,
definitely.
it's been on my list.
Extremely long. That's something you put on when you're on the treadmill type of vibe.
All right, I'll do that. All right, well, let's get into charts then.
Yay.
So somebody, and again, it makes me feel a little bit better about myself because at least I'm not doing this stuff, but somebody got a little upset about the price rises on GYG stuff. So he actually plotted it going back before the listing. This was Alexander Swan. He says, it's hard to feel inflation week to week, but GYG continues to raise the price of their spicy burrito. That's one big hit, he says. But yeah, it's interesting that for a long time, that's that line up here, they kept the spicy burrito the same price, even though inflation was rising. Then pretty well, as soon as they listed, up the prices go. So
What's the green line?
that's the real, on an inflation adjusted basis, what the real cost is.
Okay, so don't
anyway.
get independent on it. It's still cheaper than inflation.
Yeah. Until the VIX
Did you
breaks.
see that?
What?
I was going to say, did you see Powerball announce they're going to be putting the prices up because their profits for the last financial year dropped? And I was
Who's
curious
this?
because that's not in this Powerball, the lottery. But they're
Oh,
not in
really?
the inflationary basket, but yet how many of the household incomes actually go out to lottery tickets? Anyway.
I'll have to find that
but
chart.
did you hear the story about the Australian who won the $90 million lottery in Texas? They spent $26 million on tickets and then walked away with the differential. But they literally bought machines to print lottery tickets for 72 hours straight. There's this whole, people give us a documentary. Fascinating.
Oh, wow.
Yeah.
Is that a very good risk reward, though? 26 mil for,
Well,
it depends how much you've got in the bank, I guess.
Yeah,
I don't know. I thought it was fascinating.
We deliver a 3X and we're told to fuck off.
But is it 3x in the matter of weeks?
Yeah, true.
Do you know, is he in a betting syndicate? Is this guy mathematician behind it?
I think he is. Apparently, there's only 3 or 4 photos of him anywhere on the internet. Some Aussie guy living in London. Anyway, it's been all over social media.
Yeah, cool. All right, we'll check it out. I'll keep putting this up until the VIX breaks just to see whether patterns hold true, but the VIX still hasn't spiked yet, even though we're entering our spike territory. But there are a few things in the background of the US that you have to sort of question. We've now, last month, right, up until July, it's now eclipsed more bankruptcies in the US than last year. So up until July is now exceeding those bankruptcies, and that's coming from a low in 2022. So is this the beginning of a trend? It'll be interesting to see. This is the coal consumption from the US, China, India, UK, and Brazil. And you can see the US and UK, those Western developed economies, the coal is falling through the floor, but the developing nations of India and China, it's going through the roof. So it's one of the challenges with this whole let's reduce our emissions. Well, the developing world isn't. But at the same time, given we developed on the back of coal, it's a little bit hard and poor form to say, well, you can't have the same development. I do think that humans will find a way to deal with carbon dioxide, but that's maybe me being a bit optimistic. Now, another type of energy is oil. This is going back to the 1970s of the amount of oil spills that occurred. And you can see, I assume because of improvements in the tankers, it's almost zero, but every now and then there's a little spill. But that is a big trend down to nothing. Although in 2018, what's that? There was an incident off the coast of China. So anyway, this chart says the longevity boom. So the dark red is what it is today in terms of people over the age of 65. And then the lighter pink is in 2075, so 50 years from now, what the population is going to be in terms of millions of people over 65, and it's set to double. So we're going to double the number of people over 65. So I think that is going to be interesting in terms of healthcare, demographics, property, everything. It's going to be fascinating to see. I went to dinner on Tuesday night and somebody stupidly asked me what my thoughts on were with AI, and it descended into madness fairly quickly, and I have a feeling I'm not being invited back to dinner to discuss that ever again. But AI is certainly going to be interesting in the way this plays out.
So that was a social dinner.
It's a social dinner. I have difficulty separating between them. This is the S&P price to sales ratio, and we now continue to have record highs. What's interesting is we are well above the last tech crash. Like our price to sales ratio is 3.22 at the moment. And the bit that scares me is so much capital going into what I consider to be commodity products subject to competition with a zero marginal cost. I just can't see a world where there isn't some massive wreck when competition becomes clear to investors that you're not going to make the margin you think you're going to make out of these new technologies. So we'll see if that reverts to the mean. This is a visual of the week. The heading says the richest countries. So if you have a look under median wealth, Australia is second in the world, which sort of makes sense given what? We've got to put 12% of every dollar every person in this country makes into the superannuation system that self-fund itself. And then we effectively spend our life trading houses between each other at ever-increasing prices like it's a big game of Monopoly. But like our GDP, are we even on? Yeah, so our GDP is like 14th per capita, yet our median wealth is second. I have a feeling that that's not actually as good a thing as people think. To me, that there's an unhealthy thing there. I wonder if my toys are taken into account there. Now, this is the productivity forecasts of our RBA. Going back to 2011, this is at the end of each year what the RBA thinks our productivity is going to be. Up until 17, it was okay, but pretty well for close to nearly the last 10 years, it couldn't forecast to save its life. So just remember that when you put any faith in these economists. And I think I'd previously done one of investment banks and economists forecasting interest rates. They can't forecast them either, which is probably not surprising. This last chart is actually the estimated cost of renovating the RBA's building at Martin Place. In 2020, they forecast $259 million. They upgraded that to 500 million in 23. They upgraded that to 850 in 24. They upgraded it to 1.1 billion. And in August, they've now released a new forecast, and it's going to cost 1.2 billion. Now, what's driving that is they keep finding surprising amounts of asbestos through the building, and they're now going to have to demolish the thing. But anyway.
You couldn't make this shit up, could you? Like, far out.
Yeah. Finally, to end, I've started a new paid website called Older Fans. It's where people come to see what injury I have and guess how I got it.
Okay, that's funny.
That is good. Ah, there's hope for me yet.
Yeah. All right. What are we looking forward to? Oh, well, don't come
Wedding
at me all at once.
Maren and I have our wedding anniversary on Sunday, so I'm looking forward to celebrating.
It's been a year already.
It's a year already.
Wow.
hell, it's gone
what a
fast.
year it's been.
Yeah, that'll be fun.
What are you doing?
So we're going to the Cirame Wine for a little fire pit picnic experience. That's assuming it doesn't rain, because we've already postponed this twice because of the weather.
Are you going to come by here and visit?
We totally could.
Yeah, come by. I'll be home.
Okay.
You'll be
Yeah.
playing with his toys.
Yeah. Aaron's going to celebrate his first anniversary at the place that I got married. I got married at Cirame.
Hey,
Yeah, totally come by. I'll put on the
Okay.
kettle. I'll
sweet. Yeah, that'd be awesome. All right.
Do you want to check with Maren? She wants to spend her first wedding anniversary with Tom.
Ash.
She'll be fine. She'll just be grateful to be out. That sounds so bad. With a house of 4 kids, it's pretty much like that.
Yeah, you know things are grim where you would agree happily to come and visit. Well, if I could just jump in, what I'm looking forward to is I've just got the text. My new Garmin watch is arriving today between 12 and 2. Now, why do I need a new Garmin watch? What has caused me problems with my exercise in the last few months is because I left my old Garmin watch on the aeroplane when flying to San Francisco, and I just haven't replaced it. The problem is if you don't have a watch, you don't have data. And if you don't have data, you don't have evidence, and it's like the run never existed, which has held me back from exercising. So now that I get the watch and I can compete on Strava with my friends, I'll get back out there.
Wasn't that in March?
You sound so judgmental, Ash.
Hence,
Haven't you like missed the travel insurance claim period to claim that? That would assume you got travel insurance. Yep, sorry.
it's normally the thing I do when I land going, oh, fuck, I didn't get travel insurance.
How about you, Jack?
I'm looking
Ash?
forward- I'm doing hot Pilates on Sunday, so I thought you'd like that one, Ash. Me and Anna are both doing it together.
Love this.
Oh,
Very
nice.
nice.
I'm not
Very
sure
nice.
the name. It's a new place in Glenelg, like on the corner of Tapley's Hill Road.
Oh, yeah. Yep. Let me know how it is.
So I've never done it, but yeah, looking forward to it.
Make sure you take a towel.
Yeah, I've heard. Yeah.
Yeah.
One of our tenants, unfortunately, has gone broke, and it was a Pilates studio, and I've got 8 reformers
Ooh,
to deal with.
reformers?
Yeah,
What brand are they? Send me the details.
I can find out. It's like fully electronically integrated. It's got its own screen, and you choose the workout. No,
yeah.
not good.
I'm a snob. I like a human to point out when my form is incorrect. But alas, you could just start up a Pronto Pilates and
Wow. If they've gone broke, it's probably for a reason. But anyway,
who knows, maybe they just didn't have good SEO. Anyway, I am excited because tomorrow night's got some drinks organized for Tim's birthday. So it's his birthday next week. So I've organized his best friends to come and meet us in town, which he doesn't know about. So that's exciting. I think he'll have a good time. And then we have Pilates Saturday morning. So I've got him on the Pilates bandwagon. He's coming once a week. He can now generally walk after 3 days. So he's improving.
I love the fact that there's clearly no fear or risk of him listening to this.
Yeah, totally.
No. I think I said to him, oh, have you ever listened to an episode? And he's like, I have to listen to you most of the time.
No, that's fair. That's
Okay.
exactly what Libby would say.
Yeah, so I'm excited for that. And my mum has gone to Bali because she decided that it was too cold here and found a quick trip. So Tim and I are going to move into her place for 10 days while she's gone and have a little bit more room. So
Very nice.
All right, team. Well, I've got investors to email and pester. We'll see you on the flippy dippy.
bye.
See you, team.
See you guys.